Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you as well, Vinny. And today, the markets actually, we were really holding on pretty well, but only in the last half hour, you've seen this sharp slide coming about the Indian markets in tandem with what the European markets are doing. European markets have opened on a very weak footing in today's trading session. You have the US futures also, for most part of the trading session, they were in the positive territory. Now they've slipped into the negative territory. So that's the effect that you're seeing on the Indian markets as well at the day's lowest point coming in for the benchmark indices, and Nifty has given up 19,400 as well in today's trading session. Let's take a look at what other sectors or stocks are doing at this point in time. If you look at Nifty Bank, that was underperforming the benchmark indices from the word go. So Nifty Bank is something that you need to watch out for. It is actually trading lower in excess of almost 1.2% as we speak. Broader markets, you had the mid-cap index that's actually kind of outperforming, you could say, the benchmark indices, because right now it's just slipped into the negative territory, 0.2% downtick coming in for mid-cap index. Advanced decline ratio very much tilted in the favor of the declines. And talking about the sectoral indices, there's only one very, very bright spot in otherwise weak market, and that's the pharma sector. 1.3% uptick coming in for the pharma index, and it also hit a record high in today's trading session, while realty, metals, banks, IT, PSU Bank, all of them are lagging in trade. So that's the way how the setup is looking like, Vinny, but not about sectors. You also have a lot of stocks to talk about.
Absolutely, a lot of stocks to talk about, and let's get started with the list of stocks that are buzzing in trade either on the back of news flows or on the back of technicals. And today on the technicals, we're joined by Kunal Bothra, while from the research team we have Amakshi as well as Harsh joining in with us. A very good afternoon to all three of y'all, and good afternoon to you as well, Cheryl. And as always, I'm going to be starting with the first stock that is in focus, and we have Paradeep Phosphate that is in focus, and this is on the back of its numbers. When you look at it, which set of numbers was reported by the numbers, and that is why that fall that we're seeing coming in the stock price as well. Recovered from the lowest point, but still seeing a decline of around 3%. Now, when you look at it in terms of the numbers, yes, revenue saw an uptick of 25%, but where we saw the pressure coming in was the operating performance and the bottom line. The company actually swinged into a loss this time, and they reported a loss of 119 crores versus a profit last time and last year of around 62 crores. Also on the operating front, the company has reported an EBITDA loss of around 39 crores versus an EBITDA of 157 crores. So mainly the impact in Q1 on EBITDA as well as the profits were adversely impacted due to the retrospective subsidy adjustment that was made, and that is causing a clear pressure on the earnings of the company, and obviously the stock price that is also down and out in trade today, Cheryl.
All right, moving on, let's talk about insecticides. India, and this particular counter was actually buzzing in trade. Last time I checked, the stock was trading higher by approximately 5%. And the reason for this particular jump coming in the stock right now is trading higher by about 2%. It is a 3-month high as well on an intraday basis. The company has acquired an industrial site in Alwar, Rajasthan, and this is to start a manufacturing facility in order to expand production. So on back of this, a new site that they have purchased, you saw Insecticides India actually jump above 5% in trade right now, still holding on to gains of approximately 2% in an otherwise weak market. One thing is very key to note is that the company will be reporting their earnings on August 10th. Vinny.
Okay. That is Insecticides India for you all. But let's move on and talk about a stock on the technicals. And Kunal, the first stock that I've picked out for us is REC. When you look at REC, has seen a decent run up also. But now on, what is the target that you're keeping an eye out on? Should we still expect a further upside after already gaining more than 66% in terms of returns in the last 6 months?
Well, from a short-term view, I would believe that the stock should come back towards 188 levels. It's at 196. I think 188 could be a good level to buy back the stock. So what has happened is over the last 3-4 months in this leg of uptrend, REC has managed to break past above a series of major resistances on the long-term basis, which means that it's restarting the cycle of long-term uptrend on a multi-year basis. In that kind of a scenario, it's always better to buy these stocks at a 10% or a 5 to 10% kind of a corrective wave. The first level of support for REC comes closer to 188 mark, which should actually be taken as a good buying opportunity for the stock.
All right, moving on, let's talk about Pratap Snacks, Vamakshi, and this one is in focus on back of his earnings, is it?
Well, yeah, Cheryl, the stock is soaring away in trade today. As of now, as you can see, it is trading higher by nearly 7.5%, and that is because the company reported a good set of numbers. When we look at the revenue, yes, we're seeing only a marginal uptick of almost 1.3% on a year-on-year basis. They witnessed some mixed trends in consumer behavior, wherein the urban areas performed much better. But what is important to note is that the activity in the rural areas, they're expecting to see a slight bit of improvement going ahead. Not just that, the company has reported the highest ever quarterly EBITDA. EBITDA is standing at 32 odd crores versus a loss of nearly 1 crore seen last year. Net profit is what the company has reported this time around of nearly 13 odd crores versus a loss of 10 crores in the same quarter last year. When we talk about the margins, EBITDA margin of nearly 8.5% is what they've reported. They have taken several initiatives in the earlier years in order to compress the distribution layers. And in fact, the sharp improvement in the EBITDA margin that we're seeing is expected to be sustainable despite raw material prices materially higher than pre-COVID levels is what the company has said. So all in all, it looks like a good set of numbers for Pratap Snacks, and that is the reason why the stock is soaring in trade today.
Surely keeping an eye out on Pratap Snacks. But Harsh, we have Dabur, and that is also expected to report its numbers today. It should be coming in a short while. What is the expectations that we have from Dabur?
Well, yes, so let me first off look at the revenue. Revenue is expected up 11% year over year. EBITDA is expected to be around the 11% mark as well in terms of its expansion year over year. Margins expected at 19.2%, pretty much flat when I'm looking at it year over year. And you're looking at profit after tax, which is expected to go up by 5% or thereabouts. That's the broad level expectation. Of course, you know, it's largely going to be a muted performance on the back of the beverage portfolio, especially in the beverage portfolio rather, due to unseasonal rains that really hit India in Q1. You are seeing softness in raw material costs, which will support or lend some support to margins. That's the expectation. Of course, it will also give us trends with regard to how rural and semi-urban is doing with regard to demand, and food and beverage growth will be a key focus area as well. And inflation and insight into inflation outlook as well as pricing strategy will also hopefully start to play out. And you know, there is this little bit of concern over Dabur even today with regard to its honey. And essentially we have notes coming in which suggest that honey is a very small composition of the entire India business, around 6 to 7%, 5% of the consolidated business rather. News came in, of course, late last evening, and that's probably what's keeping or weighing on the stock a little bit as well. So all of those things are also playing out for Dabur, but keeping our eyes out on Dabur on the numbers as well as on the commentary.
I'm amazed that actually Harsh took more than 1 minute for not a banking stock for your sector, that too a consumption stock. I'm amazed with that, Harsh. But Kunal, also what is amazing is the way how Laurus Labs has moved. In fact, a lot of interest is being seen in this particular stock, isn't it? Are you also witnessing that on the charts?
Yeah, because this seems like one of the best weeks for Laurus Labs, I think in the last 10-12 weeks of price performance, because not just in terms of the price returns the stock has shown, but more in terms of the swing breakout the stock has shown, and the pattern of lower highs and lower lows has been broken this week for Laurus Labs. So I think that's going to be a decisive indicator for the stock in the near term. Now with the breakout of this lower highs and lower low pattern for Laurus Labs, as well as the breakout of the 370 mark, the stock looks fairly attractive from a short to medium term play. So I think traders who have a horizon of 6 months plus, I think should be looking to buy the stock at current levels. And in case if there is any mild correction towards the 350, 360 mark, take that as an opportunity to average further.
Okay, keeping an eye out on those levels for Laurus Labs. But let's move on and talk about another earnings candidate, and that is Titan. Titan is in focus, and weak set of numbers was reported by the company last evening when you look at it, and that's why the stock is under pressure as well. We saw a miss coming in mainly on the margin front as well as the profitability front of the company. And when you look at the EBIT margins of all the three major segments of the company, that is the jewelry, eye care, as well as the watches and wearable segment, all of the EBIT margins on a year-on-year basis had seen a contraction coming in. Other than that, obviously, this time around in terms of demand, what supported the demand was Akshaya Tritiya festival as well as attractive gold exchange programs that the company had. The management management also highlighted that July also has seen a decent growth as of now as well. Not much of an slowdown in terms of impact in terms of the demand for the company as well. They said that they will be pursuing market share gains across categories and remaining optimistic in terms of the performance for the rest of the year. HSBC as of now has maintained their buy rating on Titan but cut the target price to 3,580 rupees per share from the previous target price of 3,600 rupees per share, which was mainly due to the margins which has come amiss during this quarter. Now to understand more, we spoke to the management earlier in the day. We spoke to Ashok Santalia, who is the CFO at Titan, in terms of the margins of the company. What should we be expecting going forward? Listen in.
We have been quite satisfied with the Q1 performance, and it was as per our plan. Q1 generally is slightly weaker from the margin profile because Akshaya Tritiya, which is more gold-led quarter, studded activation actually happens in Q2. So Q2 margin profile and Q3 festive and Q4 again diamond activation. So overall, we are still very, very hopeful that we will maintain our guidance and continue to deliver between 12 to 13% EBIT for the full year.
All right, that is the management of Titan. That particular stock is under pressure, but there's one stock that is flying high in trade today, and it hit a 2-year high in today's trading session, and that is Lupin. Lupin has actually seen such a strong performance post US FDA has given a nod for its unit, Novel Laboratories, for an ANDA of fluocinolone acetonide topical oil. This particular drug is actually used for various skin diseases, and on back of this particular approval, we've seen the stock actually soar in trade, hitting a 2-year high. And let's not forget, there's a 4th consecutive session that Lupin is seeing such a strong gain. So yes, this particular stock continues to be in focus with the rest of the pharma pack. So yes, Lupin 2-year high on back of the US FDA nod.
Okay, keeping an eye out on Lupin, and that whole pharma pack today surely seeming very exciting. But let's move on and talk about Piramal Enterprises, Kunal. And on the charts, what is looking so attractive for you? Would you still buy Piramal Enterprises at the current market price?
Well, in fact, my belief is that the stock may actually go into some more correction over the short-term charts. So on the weekly charts so far, the stock has formed a bearish engulfing pattern, and historically it's not resulted into the stock going into any kind of an immediate recovery. In fact, such kind of evidence of bearish engulfing for the stock in the last 1.5 odd year has resulted into the stock getting into another 1 or 2 weeks of mild correction. So I would expect that from current levels of 965, 970 for Piramal Enterprise, the stock could correct by at least another 30 to 50 rupees. So maybe closer to 900, 920 mark could be a good contra buying zone for traders who are looking to buy the stock at lower levels.
All right, so that's the take coming in on Piramal Enterprises. But Vamakshi, let's talk about Indigo. If you look at the earnings of Indigo, it definitely was soaring high, flying high, all the words that you can use given the fact of the hefty profit that the company posted. But the stock reaction is not going in sync with the earnings, and why?
Well, yes, there is. The company did report a blockbuster set of numbers in the first quarter. Let me first walk you through some of the headline numbers. Revenue did see an uptick of almost 18%. EBITDA saw an uptick of almost 94%, and the margins have improved significantly from 17.6% to 29.1%, and the net profit was almost tripled from 916 odd crores to 3,087 odd crores. Now, this was on the back of higher air traffic, higher yields, higher PLF, lower oil prices, and stable rupee, which actually led to this blockbuster quarter. But there are some concerns playing on the investors' mind. Firstly, there is an overhang on the share price, which is the stake sale by the promoter. Other than that, currently, when we look at the air traffic, that has seen a bit of a reduction. Oil prices have started to rise, and the ticket prices have come down. So these are some of the concerns that investors are highlighting. In fact, Goldman Sachs has come out with a note on the company's earnings. They believe that the Q1 numbers were in line, but the outlook for Q2 looks quite weak. But all eyes will be on Q3 because the Cricket World Cup is set to happen then. They believe that the company is expected to report losses in the Q2, and they've in fact cut their PBT estimates on the back of lower yield assumptions. So definitely a blockbuster quarter for Indigo, but the outlook going ahead doesn't look so promising, and that is the reason why the stock is under pressure as of now.
All right, stock under pressure, outlook not looking that promising. But let's hear what the management actually had to say post his earnings.
For the quarter ended June 2023, the total revenue increased by around 32% on a year-over-year basis. Our unit revenue came in at 5.12 rupees, which is around 9% higher compared to the quarter ended June 2022. While the yields came in stronger than expected and remained flattish compared to the quarter ended June 2022, the load factor increased by 9 points, leading to this growth in the unit revenues. On the cost side, the fuel CASK reduced by around 26.6%, primarily due to reduction in average fuel prices. Further, the rupee closed slightly stronger at the quarter end, leading to a forex gain of around 1.2 billion rupees. Excluding the impact of forex and fuel, the CASK ex-fuel, ex-forex has increased by around 9% compared to the first quarter of fiscal year 2023, primarily driven by annual contractual escalation and inflationary cost pressures.
Okay, that was the management of Interglobe Aviation, but let's move on and talk about the next stock, and that is Vedanta. Harsh, why is Vedanta in focus today? What's the news flow surrounding this one?
Well, yes, so, you're seeing, a very tough day in trade for Vedanta, down almost 7%, and that's largely on the back of around 4% odd of block deal, shares changing hands. You're seeing that the promoter, Twinstar, is set to sell around 16 crore shares, which is a 4.3% stake via block deals today. That's the expectation. The floor price for the particular sale was 258.5, which was around a 5% discount to yesterday's close. But of course, the stock currently trading lower than that. The deal size is expected to be around $500 million. Essentially, of course, the promoter will continue to sell stake largely to pay off debt. That is really putting pressure on the stock as well. You're seeing various debt repayments happening. There was a debt repayment in June last year, March this year, as well as June this year as well, and that will continue to happen, or that's really the expectation, which is really keeping a lid on the stock. Of course, outside of dividend, which was one key way in which the promoter was upstreaming some of the money and paying debt, the other is, of course, through the stake sale as well as royalty. So all of those also putting a bit of pressure on Vedanta at the moment, down 6+%.
All right, that is Vedanta for you. But Kunal, let's talk about Escorts, and this one actually hit record high very, very recently, as early as this week. Today also is scaling higher, 22% in the last 6 months. More upside left to be made in this one?
Well, in fact, my belief is that possibly Escorts has hit, or the stock price of Escorts has hit some sort of a top or an overbought nature on charts in most of the indicators. So I think at 2,600, which the stock tested yesterday, and the stock opened at the 2,600 mark today, it seems to be that the stock is entered into an overbought territory. This actually would result into the stock going into a time-wise as well as a price-wise correction. So I think from a short-term point of view specifically, my belief is that the stock should come back towards 2,500. That's the targets which I had given for Escorts in the morning. So would maintain those targets for the stock over the very near term.
Okay, keeping an eye out on Escorts and those levels over there. Let's move on and talk about VIP Industries and another earnings candidate that we have. And seems like, weakness is clearly seen in terms of the margins of the company. Stock has recovered from the day's lowest point, but overall the numbers were not that exciting. We saw revenue growth coming in of 7%. Profits of the company saw a decline of almost 16%, and the net profit came in at 58 crores versus 69 crores last year. Even when you look at the operating performance, the EBITDA on an absolute level that came in at 81 crores versus 103 crores, which is a downtick of almost 21%, and margins also have seen a contraction of around 400 to 500 basis point approximately, and margins have come in at 12.7% versus 17.4%. So on the back of a bit of a weakness in terms of the numbers, we're seeing that VIP Industries was down and out in trade as of now, holding on still to those declines of 1%, but recovered from the day's lowest point.
All right, let's talk about a stock that is soaring pretty high in trade today, and that is on back of its numbers, and that's Mankind Pharma. At one point in time, this particular stock saw an uptick of as much as about 9%. Right now, trading higher by about 6.7%. Reason being a sharp jump in its profit. In fact, the numbers were overall beat for Mankind Pharma. Let me take you through the finer details. So consolidated net profits saw an uptick of about 66% on a year-on-year basis, coming in at around 487 crore rupees. If you look at the revenue, saw an uptick of about 18% on a year-on-year basis. The margins, what a huge jump the margins actually reported in the quarter gone by. So if you look at the EBITDA margins, came in at around 25.4% versus 20.9% on a year-on-year basis. If you look at the volume growth also, it was about 4.3%. It has actually outperformed some of the other peers as well. So a great outperformance, great beat coming in on the numbers is the reason why Mankind Pharma is soaring today's trading session, seeing an uptick of as much as 6.7% as we speak.
Okay, keeping an eye out on Mankind Pharma. But let's move on and talk about PVR Inox. And Kunal, yes, there's a slew of movies that have been released in the recent times. You've seen a lot of them, but what are you looking at in terms of PVR Inox? Anything interesting in terms of charts there?
So on the weekly charts, again, the stock has confirmed a breakout, and this comes after a gap of almost 1 year for the stock. I think mid of 2022, it formed a high or a top at 2200 levels, then fell to sub 1400 mark, and now it's coming back to its I would say stable uptrend on the short term basis. So there are some confirmations on the weekly charts that the stock has confirmed a breakout of the previous swing high, which means from a short to medium term time frame, the stock can continue to move up higher. Even the one of the other indicators, Ichimoku, on the technical basis has confirmed a breakout for PVR at the 1500 mark when the stock was at 1500 levels. So I think in that regards, I would expect that the stock should get into a steady uptrend, and traders who have been looking to buy the stock, I think 1550, 1570 could be a good zone to buy the stock on dips.
Alright, so that's the take coming in on PVR Inox. But Vamakshi, Gujarat Gas, why is this stock in focus today?
Well, Cheryl, this stock is reeling under pressure today after the company has reported the biggest ever miss to consensus estimates. Let's first look at the revenue that saw a downtick of almost 4%, standing at 3,780 odd crores. EBITDA, the analysts were expecting an EBITDA of almost 550 odd crores, but the EBITDA came in at 388 odd crores. We're seeing a downtick of nearly 31%. Net profit also was nearly 42% lower for this counter on a sequential basis, but nevertheless, the volumes have seen a marginal uptick of almost 4%. The EBITDA per SCM, however, was lower by almost 34%. Now, let's look at some of the factors that actually dragged the company down this quarter. There was a huge miss on account of poor margins in the Morbi region. The company had embarked on the strategy of volume over value by undercutting the propane prices. The volumes did grow by 4%, but the unit margins actually declined by 34%. And even the volumes that the company has reported were lower than what the street was penciling in, and that was mainly on account of lower industrial volumes. And a very short while ago, we did see an announcement that came in. The propane players have announced cut prices in the month of August. Propane prices are now cheaper by almost 4 rupees per SCM than gas, and in fact, after the recent price cut, propane in September would cost nearly 41 rupees versus 40 as charged by Gujarat Gas. So all in all, not a great set of factors that are in place for Gujarat Gas, and that's the reason why the stock is declining in trade today.
Let's move on and talk about GNFC on the charts then. And Kunal, when you look at it, last 6 months tried to pick up some pace, but when you look at it in the near term or even before that, it has not done pretty much anything in the last 1 year. What is the technical chart now indicating for GNFC? What should we be expecting here?
See, in the month of May, the stock formed a high of 666, and from there it fell sharply towards, I think, 600 mark in a matter of few days. Post that, there was almost a 1.5 odd month of consolidation. Now, consolidation generally means that maybe the stock is trying to get into a zone of sideways where buyers may get back into the thick of price action. But if the stocks, break below their major support points, that's where we believe that the consolidation is actually could result into a further downtrend. Now, what's happened for GNFC is that the stock has broken its key support of this consolidation. It's also broken below the 200-day moving average. I think yesterday was one of the days where the stock had broken below its 200 DMA, and these are generally first signs of major weakness which could come by into the stock price. So net, I would believe that the stock could correct further from current levels. I would expect 540, 550 as a modest target for GNFC over the very near term.
All right, further downside is what Kunal is expecting for GNFC. But on that note, we'll slip into a break on this edition of Market Fatafat. When we come back, we continue taking all of your stocks, or rather all the stocks that are buzzing. Don't go anywhere.